Welcome to Wall Street Confidential. Jim, we're seeing a new phenomenon. It's not freshman phenoms, it's second-day phenoms. In stocks like MasterCard,
right,
which think about them popping up to 130 after going from 115 to 125 on earnings.
This is a problem of mechanics. And people, unless you've tried to find a buyer, unless you've worked at the sell side and the buy side, fortunately I've got experience on both, you don't realize what's really going on. There'll be a large mutual fund and mutual fund family, and there'll be maybe 6 funds within that family, and they all decided at a meeting they like MasterCard. They also say, listen, we like MasterCard, it's at 112, maybe up to 160. I think it goes to 200 because there's accelerated revenue growth and the multiple is way too low. So you'll go into Goldman Sachs, you'll say, look, you're Fidelity. I need a $2 million position for Fidelity Magellan Fund on MasterCard. That's how much you have to do now to make an impact to the amount of assets that Magellan has. So Goldman will short them 200,000 shares, up $2, to hope to find other sellers. Then all of its great sales force will call all the accounts and say, listen, we're looking for stock. Your first reaction if you own MasterCard is, wow, I'm not going to sell it because they're so desperate to find it. So people then have to take the stock to what's known as a level. The Fidelity guys will say to Goldman, look, you don't have any stock at 112, 115. Take it to 125. Just take it up there. That brings out sellers. This stock in particular did not bring out sellers at the 125 level. So that's why you have the second day. Remember, Fidelity's doing this with Goldman, or a derivative of Fidelity, but American Funds is doing it, like Mason is doing it. This is happening all over the street with different brokers. They're all competing for the same stock. There wasn't any stock around. Now, this is what's amazing about it. There's still no stock around at 135. I think that the sellers really live at 150. The only sellers you're getting right now are the people who bought ahead of the quarter and flipped, or hedge funds.
Sounds almost like you have guys in a room setting prices. Sounds almost like price fixing to a certain extent. Or is it, is it just a little bit more diverse? Or maybe I'm just missing
not
it.
at all. Yes, you're missing it. I don't mean to be...
No, it's okay.
What's happening is it's just the opposite of price fixing. In order to be able to show your large commission-generating client at First Boston, you've got to try to get the position in. You're actually competing with Goldman, who's competing with First Boston to find sellers. So there's many more buyers than sellers. These guys all are up against each other. They would love to be able to sit in a room and say, listen, if you won't pay above 130, we won't pay above 130. But it's just the opposite. They're all competing to find these sellers. And the sellers, by one of the fact that the stock is placed in certain very proprietary hands that don't want to get rid of it, don't exist at these levels.
They just don't exist. Jim Cramer, Greg Greenberg. It's Wall Street Confidential.